Many of you will never have heard what I'm about to show you in this video, and even those of you who would have heard about it may never have seen it taught in this way. Pay attention, I'm about to give you free game. In trading, there's the concept of seasonality, or what we call seasonal tendencies. What they tell you is that every asset class at certain times in the year tends to move in a particular direction. So for certain commodities like cotton, soybeans, those are tradable assets, you'll notice that when they are in season, they tend to perform better. So you want to be buying around the time of the year when their stock tends to rise. You can apply this concept to the forex market, to the metals market, and to the stock market as well. It's not as clear-cut in forex, but it can be a really powerful tool if you know how to use it. Now, the problem with seasonal tendencies and seasonal charts is that a lot of the time they are difficult to find. Many websites offer them as a paid service, but I've developed a way to track seasonal tendencies on your chart that you have with you. So here's what you're going to do. Take any chart. It can be Euro USD. Now the January monthly candle has just closed. So this is the perfect time to do this type of macro analysis. Go on the monthly chart and look at how the February candle for the last 10 years closed. And I'll show you something very interesting. Actually, let's go to the chart. Let me show you. This is Euro USD on the monthly time frame. I have marked out the February candle for the last 10 years. The arrows pointing upward show that it was an up close or a bullish candle, and the arrows pointing down show that it was a down close or a bearish candle. So we have one bullish candle, bearish, 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 bearish. So what this tells you from a macro perspective already is that in 10 years, we had 9 times where the February candle closed bearishly or was a bearishly expanding candle. That tells you that there is a 90% chance that this February candle that is about to open is going to, if not close lower, at least expand lower. Now, you don't take this and trade it blindly. You compare what you expect from this seasonal analysis with what is happening currently. So the current monthly candle, how did it close? Well, we have something beautiful unfolding here. Price traded into a monthly fair value gap created all the way in 2021 and has rejected from it. You see this candle, it traded beyond it but failed to close inside it or beyond it and has closed back inside this range. This was the monthly high that was taken out, but price closed back in the range. So that tells you that our bearishness is being supported by the current price action in the market. Please don't go inside and start selling. What you do is you go down to the weekly time frame to see if there are any weekly points of interest. On the weekly time frame, nothing obvious in this weekly candle. So you go down to the daily time frame. On the daily time frame, we have 2 strong bearish days, but we don't have another block formation yet to a fair value gap. So you go down to the 4-hour. You see the systematic analysis? Okay, fantastic. Now we have our first fair value gap. The 4-hour is showing our downtrend, lower high, lower low. This fair value gap that was created here has been filled in, and so we have a new fair value gap here. This is a bullish daily fair value gap and it's sitting at 50% of the range. So if price is supposed to trade back into the range, what can you be expecting now? You're bearish. You're seeing your bearish PDR raise on the 4-hour time frame. If Monday's candle opens and price starts retracing, trading higher into this 4-hour point of interest, then you go down to your 15-minute time frame to see if you're seeing a change of character, a break of structure, showing you that price wants to start going back lower. And this can be your first target for February. You sell from this green box, targeting this red box. Now, these are the caveats with using seasonality. 1, it is not an entry trigger. It does not tell you go into the market and start buying. Because I know you traders, you're always looking for, just show me the simple thing. Now I've shown you this thing and you know that there's a 90% chance that the February candle is going to trade lower. You just enter from 1st of February and start selling with full margin. Don't do that, please. What you're doing is you're watching the market to see the structure that is forming. Is the market supporting your thesis of bearishness? So you're looking at the 4-hour time frame, on the daily time frame, on the weekly time frame. Are you seeing bearish market structure? You're going to be trusting your bearish PDR raise a little more. You're waiting to see if your 4-hour fair value gaps are holding, if your 1-hour fair value gaps are holding, if your daily fair value gaps are holding. When the market is supporting your thesis, that is when you use it. Also, it's a monthly candle. It does not mean that every day in that month is going to be red. No, there are going to be up moves. There are going to be retracements. The month might even close as a bullish candle, but your aim is to catch the bearish expansion in the month because you anticipate that there will be bearish expansion and you think that it will be the predominant price movement for the month. I'm Bernard the Trader, and I'll talk to you later.